What's going on, everybody? Mitch here, and this is your March market update covering the February statistics. We're going to cover a broader range of areas this time, and what we've got to report high level really is that it was just a bad month of sales all around. And of course, the narrative that was in place in the fall of rates are coming down, the market's starting to heat back up again, at this point has more or less totally dissolved, and we're looking at inventory piling up across most cities in Ontario, and sales rates really down both on a year-on-year level and on a historical level. So let's jump into what we're going to cover in this video specifically. Okay, video at a glance. This is basically the table of contents of what we're going to cover here. If any of this isn't relevant to you, you should be able to skip ahead in the chapters and jump to the relevant part that you want. But I did want to cover a broader area of market statistics. One, because I want to illustrate the scope of the trend that's happening right now, and two, because we have over time started to operate in a bit wider area than just the city of Peterborough. And so I personally have been following the stats more closely, say in Northumberland, for example, and I wanted to bring these stats to the table for anybody who's interested in these areas as well. So if it's not relevant to you, just skip ahead, use the chapters, and hopefully there's going to be some value in anybody seeing all these cities at a glance. We're going to cover the city of Peterborough, Peterborough County, Belleville, Northumberland, Kawartha Lakes, really high level about what's going on in terms of sales, prices, and total inventory in each of those. And we're going to cover the GTA. Really want to cover what's going on there because anybody who's watched my channel for any amount of time knows that I feel strongly that whatever happens here is just a time-delayed version of what's happening in the GTA. I always think of it sort of like a tsunami out in the middle of the ocean. You have tectonic plates shift, and there's an earthquake in the middle of the ocean. That's the epicenter is the GTA. And then what happens is this huge wave comes, and it's inevitable. It's just a matter of time that whatever happens there will happen here. It always translates through, moves from downtown core, moves west through Durham, and moves to us. So whatever's happening with sales there really is one of the strong indicators that we have about what to expect over the next 3 months. Of course, it doesn't give us a ton of ability to predict. Too far beyond that, nothing does, but it is a really good view at what's coming down the pipes, and there's some pretty big stuff happening there. Lastly, last piece is going to be the buyer and seller advice based on what we cover here today. So specifically how to react to what we see out there. So let's jump into the next slide. Okay, if you're new to the channel or for any reason you're not subscribed, we are covering regular market updates monthly again here, posting our new listing videos, but starting to cover the Peterborough, Kawartha, Northumberland region. And of course, if you give the video a like, it does help expand the reach a little bit, helps us out, so we appreciate that. Okay, city of Peterborough, the first number I'd like to bring your attention to is this one right here, down 36.4% year over year. That's absolutely massive. I mean, February last year was solid, but it wasn't a record year by any stretch, and we're down 36% from that. So as you can see, only 56 sales in the entire city of Peterborough in February. It's a really low number. We had 88 last year, and we only had 81 active listings. So that combined says that we had about 1 month of inventory this time last year, and look at this year, double the amount of listings and sales down 30%. So what you see is that prices haven't moved much yet. They've only down 3% year over year. But of course, as you're going to see in all these other cities coming up, is that if this trend holds where active listings continue to really shoot up like that and sales are down so much year over year, these prices year over year are going to start to diverge much more than 3%, almost certainly. A Peterborough region, just an extension of that same pattern. City of Peterborough is just in the city boundaries. Peterborough region encompasses a larger area and some of the smaller communities on the outskirts of Peterborough that aren't statistically relevant enough to track in and of themselves, like Duro and Ennismore, for example, because most months the data set's just too small that it's not really coherent. But you're going to see really just an extension of that same picture. Right here, prices actually are up a little bit year over year, but sales down 24% and inventory ballooning in the same way as we saw in the city. So again, high level thesis would be that it's not likely that in the long run we're going to continue to see prices up on a year-over-year basis with this trend continuing. Hey, Belleville, not an area I've ever covered before from a statistical standpoint, but I have had both buyers and sellers in that area, and I actually lived in this area for a number of years when I went to school. And it's just an extension of the same pattern. Look at very similar sales, down 24% year over year. Prices basically flat, but you do see that inventory more than doubling just in terms of a static number of active listings. And with sales down, most of these cities, what we're seeing is almost a tripling of inventory on a year-over-year basis in terms of months of inventory. So most of these places had very close to 1 month of inventory at this time last year, which is just taking the active listings, dividing it by the amount of sales that happened. Whereas this year, it's close to 3 and above in most of the areas we're looking at. So nearly a tripling of the inventory relative to sales. Northumberland. This encompasses a very large region down to the south of Rice Lake, sort of along Lake Ontario and the 401 beyond Port Hope and Cobourg and encompassing Port Hope and Cobourg. And you'll see there a really pronounced version of this where we got average days on market. This includes some markets that are quite east for most folks, not really that desired as commuter towns. You start pushing out towards Roseneath, and it's a little too far for most people in the GTA. But I mean, look at this: 63 average days on market. It's a 2 months average listing, and sales down 41% year over year. Really, like a massive decline from what was already just an okay year last year. And again, to zoom out, where we see the total active listings in most cases nearly doubling, and then the sales going down by nearly half, you're getting that same picture where you have a tripling or more of months of inventory. Kawartha Lakes, you may be asking yourself, what's the difference between Kawartha Lakes and Peterborough region? Peterborough region's more immediately outside of Peterborough, whereas the Kawartha Lakes region shoots much farther north. And encompasses Lindsay and some areas that most people may not consider unless they're looking at cottage country. But nonetheless, just a continuation of the exact same pattern. It's broad span, it's across the map. Sales down 33%, prices more or less flat. But as we would hypothesize, likely to start to decline if this trend continues. This slide right here is a screen grab from Twitter of Rob Marcialago, Durham agent, who is also a friend in the business, and he does an absolutely fantastic job of covering this stuff on Twitter. And he's charting this all himself, where this is his, he does a weekly count of inventory. And as you can see, based on the legend there, this is Toronto, Durham, York, Peel, Halton. But I'd like to draw your attention mainly to Durham because it's the closest one to us, and it's the one that's the most immediate predictor of what pressures we're going to feel in the Peterborough, Kawartha, Northumberland region. And at this time last year, you see this months of inventory in February just down, below 2 at around 1.5, and then it sort of got mowed down again in the fall. We had that blip of optimism over the rate cuts, and this shows the story of where it shot up in January, and it's kind of flatlining here now around 3 months, but it's certainly higher, nearly double what it was this time last year in Durham region, months of inventory. Okay, lastly now for GTA trends, this is another great account to follow on Twitter, and you see that. Okay, first the caption. Toronto prices hit a new low. February's decline was compounded by a downward revision to last month's data. The resilience trend appears to be broken. What does he mean by that? Well, if you go back to February 5th, just a month before, Alex made the comment, it's remarkable how stable real estate prices in the Toronto metro area have been over the past 13 months. And if you see, really, you go back to December of 23 all the way forward to December of 24, and they were just like dead flat, even though inventory and sentiment was questionable, inventory rising and sentiment wavering. But then he's showing here with this point on the graph where a mill 63 average price, and we've dipped below this prior current low in February 23 of a mill 67. So essentially, like he's saying, that narrative it can certainly be challenged, if not scrapped at this point, that the Toronto prices are resilient. Of course, we can only add so much inventory and have sales slow down so much and have prices hold. There's just far too much competition. There's too many power of sales coming around. So prices are starting to break downwards. That's what we see in Toronto, super high level. So of course, if prices in Toronto are starting to enter a state of decline, it's going to ripple through Ajax, Whitby, Oshawa, Bowmanville, and then it reaches Peterborough. There is a bit of a time in the translation, but almost certainly it comes here. The outlook. This is literally a carbon copy of what I had on last month's presentation, because the advice hasn't really changed. And more or less, we're moving from like balanced into more buyer's market territory. So what does that mean? Does that mean if you're a buyer, you don't buy? I mean, we don't know necessarily how long these headwinds will hold. How much of this flip-floppy back and forth stuff with tariffs is going to happen before they just either, hold it until it breaks something or totally pull it off the table. We don't have the ability to predict that super long term. So what we do know is that only so much damage can happen inside of a 6-month period now in terms of price declines. So if you're a buyer and you're out there, I mean, if you're looking for a commodity style product where there's lots of stuff like it, like a condo or like a very simple brick bungalow, yeah. Do you want to get a deal? Absolutely. You want to go ahead and leapfrog and try and build in the discount that is more or less some version of the worst case scenario. You can anticipate prices dropping, or you find the absolute right thing that you're not confident that same thing that to meet your needs as well is going to pop up again in the next 3 to 6 months. But on the flip side of that, if there's something totally unique, you're looking at like a rural high-end luxury property. Sometimes, we have some buyers in this high-end luxury space that look for up to 2 years. And if the perfect thing comes, are you going to take the stance that you're not going to purchase it because you're worried that prices are going to decline? I mean, if you got a 5, 10-ish year ideal holding period on something that's so unique and so special, odds are this is all going to get wiped out or cleared out for you. But if you risk losing that property and not offering and just trying to get some type of a discount, then I mean, you could be back into, you don't find another thing for the next 2-year cycle beyond that. And it's just very hard to predict what if tariffs get pulled back and, the US and Canada simultaneously put rates on rock bottom again, and we just have super cheap money in every program in the world to try and bring buoyancy to housing prices. It's not to say that it can't happen and that we can see resilience in prices if you miss your opportunity. Sellers, you really have to be priced not just right, but a little bit below the pack of anything that might be seen to be comparable to you if you want to sell within the average days on market. You looked at all those cities we just looked at, whatever the average days on market is in your area, for your own logistical thinking, if you want to be earlier than that time, or at least at that time, you have to be not just on par with what's out there, especially in situations where you have a commodity style listing where there's 15 other competitive listings in the same area that all offer something very similar to you, price for value. You have to edge them out a little bit. You have to be the one to raise your hand and say, I'm ready to go. I realize I'm not going to ring the bell right now at this time. I want to sell because I need to move for reason X, Y, Z, whether it's estate sale, divorce, job change, etc. If you're in one of those situations, you really aren't in a position of leverage at this point in time to try and maximize price. It's more about being strategic and trying to get low enough that you're not the last one on the boat on price decreases. Price assessment, I mean, sideways with seasonal ups and downs, that is still more or less in check, but that could even be challenged at this time. Like my original thesis was always slight downward pressure rather than slight upward pressure, but that I wanted to buffer that with some temperance for, hey, seasonally in the spring we could see a little bit of buoyancy and then just peter sideways and down through the whole summer like we've seen a couple years in a row now. But that there's a very good case to be made that you may even need to scrap that and say this spring could basically be flat. So you're not going to have that little 5% seasonal pop. It's possible, but I would say that the probability of it happening is trimming down. Say like on an annual or an average year, it's 80+%. You're going to see that little seasonal blip where buyers come out in full force when the snow melts and there's not a full roster of listings. To the probability of that happening could be diminished as low as, depending on how we want to look at it, I would say it's a coin toss, 50-50 at this point. So that's it. If you have any specific questions, if you're considering buying or selling anytime in the next 3 to 6 months, and you just want to chat, have a high-level consult about your situation, we are actively taking on new clients. We just hired a new administrator. We're actively working on having the best processes possible to serve you at a high level, and we really want to have real estate conversations right now. So you got our info. It's on the bottom of every slide. Feel free to reach out. You'll find it in the description as well, and I hope you took value in this video. We'll talk to you all next.